Okay, so today we are going to go through trades that we identified and took in my video that I posted yesterday. Link in the description below. So what I'm going to do is play the bits from the video and then look at the current charts and see what's happened. So let's now look at the first signal that I actually spotted during the video yesterday, and then I took the trade. You will see how I saw the setup and how today I took another trade on a different time frame, taking advantage of the same situation and hence doubling my profits. So let's go through that. Okay, so this is the first signal that we saw on Bitcoin, and I'm going to play the video for you now. Setup one, I can actually see it from this chart, Gator open. Edward, if you're listening, Gator open. Don't need to worry about purple at the moment because this is the higher time frame for me. So if this Gator is open and AOS peaked and the bars are dark without divergence, H4 is going to have a setup. I've got a bet on it, and let's see what happens. Yes, there is a setup. So you have a clean 3, sideways 4. Now around this time it was a setup 0, but now as you can see the purple is not touching the Gator. Always going to look at the lines at the right end, the right edge of the chart, because they are shifted lines. So if I wanted to take this trade, it will be a setup 1 here, and my target would be based on the target zone. Secret given away. This is, and this would be my target point, which is, let's call it 94 points, and let's call this 30 points. So that's 1:3. I can easily put a trade on this without worrying too much. So let's bring this to swing, and I'm going to move this stop loss up there, and I want to enter around here. So if it was to break out, it's going to be a strong bang. So we'll do that. Okay, so you saw yesterday's video where I spotted the trade on Bitcoin, and let me show you another bit of it. So when you see this chart, I have the hunt template on at the moment. You can see the red dot, but you also see the hunt cherry here. The cherry and the PC pattern identifies a setup 1 for me on the H4, and that's what we saw. So I went to the H4 and I saw the setup and we took the trade, and as you can see it's going down pretty nicely. Now I also said that I will tell you that I took another trade on this. So on a different market I took a trade on the hourly chart. Let me drag and drop, and as you can see I took this trade, but this trade is actually excuse me, this one, and bring it back. That's the trade that we took on the 4-hour chart. If you look back at the video, I said I'm going to put my order outside of this, but today we also took, not today but the same, I think a little bit later, we also took one more trade, and that trade was based on the hourly chart. So this one is the hourly chart trade. This is the 4-hour trade, and this is the hourly chart. So the 4-hour chart trade was at these levels, but the 1-hour trade is on the inner levels around here. I can easily bring my stop loss to this area now, which I'm going to do now. Bring it here. What it's doing now is that inside the formation of the hourly chart, we have a 3 down and 4 sideways. So we have a 3 that is 1 day, and then we have a day and a half wave 4, and now we have the first spike of the third wave of the wave 5. So this is the wave 5. Inside the wave 5, this would be its third wave, and this would be the 505. So it's hit my target. I can now exit here pretty nicely. My target is far away, but this is the trade. This is the exit that which I should take. So I'm going to take the exit and bank £145. So that's one taken, but the other trade, which is the 4-hour trade, will continue because the target for that is the target zone 1. Let me draw that again. So we will start there. We'll consider this. So what I've done here is I've shown you something that is very niche, very unique to AIMS trading. We trade the waves within waves. We trade setups within setups, and so we double and triple our profits that way. So the same trade idea allowed me to take 2 trades. So one is running on the 4-hour chart, and it's on the same pattern 3, 4, 5, but the hourly chart that I showed you is based on this move, and that means that I've traded the 5 within the 5. So if I take you there, this is that function. Let me put a box around it. So this 3, 4, 5 that I've traded is actually within this section. So if this is going to be a wave 5, then I probably will get another setup somewhere down there tomorrow, or maybe later today, most probably tomorrow, and I will still pursue it because by the time it reaches this level for the 4-hour chart, which is the Tiger Zone 1, I could have another setup on the hourly chart. One I've already taken. Tomorrow this 5 could turn into a 3, and if it does, then it might set up around this area again, and tomorrow or the day after you might get another setup. So this is how it is. This one is running. Now the next one, we're going to look at the gold trade that we identified live in that video. So I'm going to play that video for you, and then I will tell you the result. It's here, half a risk. I'm going to go to the hourly chart, and I'm going to go market order, and this blue line, I want to move it around here. That's where I will exit. So I will go in, and that would be a $250 risk. This is where it's going to hit break even when it hits the peak of 3, and if you're lucky, it will go there, and it will hit wave 5. If wave 5 becomes a wave 5. Okay, so you just saw I took a trade, which was a market order. Now I don't usually do market orders, but that is what I saw at that time, and I saw this setup going on. This is how I take a setup 0, where I understand the market from different perspectives. And so new people don't trade setup 0 where purple is mingled with the gator, but if you understand the structure of the market, and you know that if you've done your analysis like we did now, and then you know, so it will be around stage 3 where you can do this. Anyway, so we took the trade here. This is where the trade was, and I had identified these levels, and so I exited at will. It wasn't a target point. Target point was down there, but my feeling was that this is going to hit, and this is how gold moves. It moves in kind of spikes, bouts of energies hit the markets like this, and then it turns around quite quickly. So I sometimes, on gold, my strategy is always that when you see 1 or 2 H1 candles move strong in that direction, I would take my profits quickly. So this was a quick trade that resulted. Let me just drag and drop that again. Let me just refresh the template. Let's see, it was here. I'm going to go to the history chart, drag, I'm going to drop it here, and as you can see, the lines appeared. So my risk was about 69, and I took about 69 or 67. So a 1:1 trade, not bad at all. And now I'm going to play you a video about EuroCAD and EuroPound. So it's currently, it reacted to the peak of 3, to these bottoms of wave 3, and it's not much to go, about 15-20 pips to go, and it would hit the target point. It's break even anyway, nothing to lose here. So that's a lovely trade. Let's go to the next one. EuroPound was a similar situation. It was a difficult one to take because the wave 4 is a little bit different, but what I want to talk about is these 2 days. So in the previous example, we have a setup 1, which is a 3-day setup 1. So the 2 days are the setup, and the 3rd day is your trade day. So it's this one, and on this setup you have a 2-day wave 3 and a 1-day wave 4. So this is a 4-day setup for now, in which 3 days forms the setup, and the 4th day you take a trade. And let me tell you this, that the maximum we do is 5 days, where you have a 2 days wave 4, or 2.5 days, sorry, 2 days wave 3, or 2.5 days wave 3, and then you have 1 day to 1.5 day of wave 4, and then the next day is your trade day. Okay, so you just saw the video of Euro CAD and Euro Pound. So the Euro CAD was revealed on the same video. Was it the video afterwards? I'm forgetting now. I think towards the end of the video I showed that Euro CAD hit its target, and Euro Pound later on I took the profits on it as well, which is this. It comes here, so stop loss was 65, actually less than that, about 50 I would have got out, and we took 83 pips on it. Today it's hit the target zone, but this gyration that happened today earlier, if I had stayed in it, I would have brought my stop loss to break even, and most probably it would have hit it, or maybe it would not have hit it, but I won't stay in it. If I got up in the morning and I saw, or if I had let the trade run on VPS, it would have been got out using the T fractal, which is the trailing box mechanism. So it would have got me out for 57 pips. So this is what it is. If you just follow yesterday's video, I'm going to put the link in the description. You watch that video, it's a deeper analysis of how I trade, and then you see the results today. This would definitely convince you how powerful this method is. And if you would like to learn more, we have 3 strategies: the setup one, the hunt, and the fruit method. In between we have other tactical strategies as well, the new strategy, the low bot. So I'm going to make a course on that. The the low bot strategy, the new strategy, the PC pattern, the Scooby pattern, the B pattern, all of these you can learn. So if you would like to, please download that free ebook. Link is in the description. And once you read that ebook, the 10-second to Elliott wave, you would understand the basics of this strategy and how we have built those 3 strategies to maximize on this knowledge that we have gained from the 10-second Elliott wave ebook.
Thank you for watching. I hope you liked this video, and if yes, please hit the like button. Do you have any questions or ideas for upcoming videos? Then leave a comment. Also subscribe to the channel and hit the bell icon so that you never miss any future videos. See you next time.